When people talk about threats to your portfolio over the course of the next 10, 20, 30, 40 years, people talk about interest rates, inflation, market crashes, and all that sort of stuff that we know about. But I think the biggest risk to your portfolio over the course of the coming decades is the division that we see within the society at the moment. The growing fractures across the Western world can and will have an impact on your portfolio. We won't get into the society impact of that today. This is an investing channel, so I want to cover what I think that potentially could mean for your portfolio. Because history shows when societies break apart, investors pay the price. In this video, I'm going to show you some data, some real life examples from history, and some scenarios of what could potentially happen over your investing career, given the circumstances that we're facing into right now. So why does division even matter to investors? You'll have to excuse me on this video. I don't normally script these things. There's a lot of data in here, so I have got my notes here, so if you see me referencing them, I do apologize. First, political polarization is the highest that we've seen in decades. Surveys from Pew Research in the US shows that Republicans and Democrats have never been so divided on core values, and this division has doubled since the 1990s. In Europe, we're seeing the same sort of levels of division. Trust in governments and parliaments are at record lows. When trust in administration wavers, governments struggle to pass even the most stable policies, and that in its own right creates uncertainty, and the market hates uncertainty. Social unrest has an impact as well. So the World Bank estimates that this level of social unrest that we're seeing at the moment can knock 2 to 4% off GDP. That can turn a market from being within stable growth to absolute stagnation. If you think about it, economies rely on confidence, consumer spending, businesses investing, and countries trading. If people are divided and fighting, that confidence just disappears. We don't have to look too far back into the past to see how damaging this can be. Let me give you a few examples of what we have seen in the past. In the 1920s, Germany set up the Weimar Republic. This was set up after the First World War, and it was a fragile democracy riddled with debt, political issues, and basically a lack of trust in the leadership in any way. This led to hyperinflation. People were walking around with wheelbarrows full of cash, unable to even buy a bloody loaf of bread with it. When societies truly do collapse and fall apart, money actually does become worthless. In the UK in the 1970s, endless strikes, political unrest, the IMF bailout, inflation soared. The stock market crashed, and any confidence in the pound absolutely slumped. That was social and political division directly hitting people's portfolios. In the US in the 60s and the 70s, we saw civil unrest, we saw protests over Vietnam, and political scandals were rife. Between 1973 and 1974, the S&P 500 dropped by 50%. Now, the oil crash did have an impact on this, but it all came all together in one big absolute nightmare for the markets. And it was compounded by political chaos, unrest, and division. Most recently, Brexit in 2016, one of the most divisive things in recent history, saw within a matter of days £1 trillion get knocked off the UK market. So again and again, we see the same examples, and I fear that we are at the beginning of another one, right? It's political instability, unrest, and division that causes the markets to crash. There are other factors involved, but that level of uncertainty, of lack of confidence that's going on, of people fighting against each other, this is just what happens. So let's give 4 scenarios of what could potentially happen over the course of the next 10 to 50 years if we continue on to the trajectory that we're going in at the moment. Scenario 1, political gridlock. We're already seeing this in the US, where debt ceiling standoffs almost caused the government to shut down. If that continues to escalate, borrowing goes up, credit rates fall, and the markets inevitably will wobble. Scenario 2, complete and utter social unrest. Think of France in 2023, the riots around pension reforms. The impact of that was billions of pounds in lost output, and of course all the damages that occurred, the continued unrest that it created, the lack of trust in the government. How hard do you think it is to create policy when the streets are filled with people rioting? So if that continues across Western countries, or we're seeing more examples of that, it's going to sap confidence and the markets will decline. Scenario 3, a continuation of geopolitical fragmentation. So we've already seen the impact of Trump's tariffs. So if we see continued trade wars as a result of this unrest, this aggressive nature where countries are fighting against each other across trade, as an example, to just start, this creates unrest and uncertainty as well. Within these countries, it creates a higher level of patriotism. People regress into themselves, and it makes it harder to do business across the world. We see an impact on global supply chains. They become inefficient, and this just drags on the economy and potential growth. Scenario 4 is extreme politics. Populist and nationalist parties coming into power. These can be extremely dangerous. They don't act in the way that normal governments do. They can spring surprise taxes, they can bring policy, and they can bring laws into place that can have a detrimental effect on not just the economy, but the social unrest that exists within those countries as well. What happens? Growth stagnates, markets decline. None of these scenarios are guaranteed, but all of them are possible, and every single one of them ties back to one thing: uncertainty, unrest, division. So what can we do about it if we are investors right now? Like I said, we're not getting into the social side of things. This is an investing channel, right? I'm trying to build long-term wealth. So are you. That's probably why you're watching it or have watched any of my historic content. And I'm not scaremongering in any way. I'm just openly talking about something that I think is a real threat to our portfolios going forward. And that's what we're all about here. So option number one, obviously, is diversification is absolutely key. If you are 100% into any specific geography, that's going to create risk. If we see an uprising and social unrest within that specific geography, your portfolio is going to get impacted, and that could last a number of years. The second thing associated with that is having a home bias. So whatever country you're watching this from, if you have a high exposure to the country that you live in, that in itself is not diversified and creates risk, again, if we see any unrest or uprising within that specific country. So I've talked for years about my penchant towards globally diversified all-world funds, and this is another example of why that might be a good idea at the moment. Now, if we see like a global unrest, which it feels like we are at the moment, we'll at least all be struggling within the same fund at the same time. But what we are going to be doing as a result of that is making sure that whichever countries come out on top going forward, you will be covered and you will be invested into that country. Now, I'm not saying that we're going to see the collapse of the US, we're going to see the collapse of the UK, but being into an all-world fund just basically means that whatever happens across the world, you're going to have exposure to whichever country is doing the best. Second thing you can do is remember that resilience isn't only financial. So when we have seen these examples of historic turmoil that have impacted on the markets, the countries that have recovered the best are the ones that have reset back to unity and trust the quickest. That's as important as any ETF or index fund. So yes, inflation and interest rates are going to have an impact on your portfolio in the long term, but history shows us that the biggest impact on your portfolio is social and political unrest, division within countries, division within societies, neighbors even falling out with each other, family members falling apart. Now, social media has a lot to answer for with all of this, and anyone that gets sucked into any sort of extremist, which within any direction that it is very easy to do so. You automatically get fed more of what you consume. You end up in echo chambers of certain discussions, certain political ideologies, societal concepts around what is and isn't right, why you are being treated badly, why life isn't fair, blaming certain people. That happens and is happening at an exponential rate at the moment. Actually, it's quite terrifying in reality. So I do hope that nothing comes of this video, right? I hope that none of these things that I've talked about actually come to fruition. But I genuinely do think that this is potentially one of the biggest risks to your portfolio over the course of our investing careers.